Welcome to TYG Trading. Now I'm trying to explain about gap. Hey Tomo, welcome. No worry. I'm fine, thank you. Okay, I try to explain about how to identify a gap first. There is a delay here, so need to be more patient. Okay, before we start with gap identification, mostly we have to look at a strong time frame. For example, I'm using a daily chart here. So I usually will draw a line where I can see there is a rejection. For example, here for Euro USD, the daily chart, I will mark everything I can see here. Then from here, I know the location where the price has something important. From here, we know that there is this is the resistance for daily, the daily time frame. This is the support for daily time frame. Then usually after I know everything, I got all the information here, I will go to the lower time frame. For example, I try to go to the 4-hour chart here. Then I start to see where the price forming a range. For example, here, see, this is small range, but for in a 4-hour chart, we have to identify market range available here. Market range is the range where the price usually accumulate. We got this one, for example. Next, we need to verify if this range is valid for 4-hour chart by drag the chart the same size, drag the box the same size to other range. You see here, probably we need to resize the box smaller. So here you got the 4-hour market range. This is actually the best. We can conclude this is the best for 4-hour chart. Next, the best, like the principle I taught before, will shift to another level. From here, we can identify, for example, from this one, when the price base here, they rally to another base. This is also a base, but look at the market range. This base is not belong to 4-hour chart. This is the lower time frame one. This base is belong to a lower time frame. So from here we can conclude that it happened from here. Rally base rally, this is the base drop base rally. This is an example for a reversal. When you can see like rally base rally, it means it is trend continuation. Why does it belong to lower time frame and not for our chart? Like I have described before, we need to know market range. Market range is the movement of a price, the movement range on a price, on a chart, a movement range in a chart. For example, from this 4-hour chart, just zoom out, we can see there is a consolidation area here. See, we need to look for patterns. One of them is market range. How the price move in within a range. For Euro USD, the 4-hour chart, we have price usually consolidate in within this range. This is just like a prediction. We need to verify by you just draw a box within a consolidation area and try to move the box to another consolidation area. It should be more or less the same. So we know for 4-hour chart there is market range about this size, for about 120 pips around here, more or less. This is used to identify base area for 4-hour chart. Yes, correct. If there is a market range, or you can see there is a base smaller from the market range, it should be belong to lower time frame. Yeah, you see, about the same, right? So if you can see, if you see from here, this part, this one is smaller compared to others range, so it should be belong to lower time frame. So next, after we can identify we just call it base, we can identify all the base. We just look at how it move. When base go down to a lower one, it means it's drop. When it up, it is rally. When you can see the movement from one base to another base, leave some gap in between. For example, this one, for example, this is the most obvious one. So it means on 4-hour chart we can see there is a gap. When we switch the chart to daily chart, it is actually a gap, but it cannot how to explain it. This one is hidden gap. Yes, correct, this is FVG, but it's when you see this kind of FVG, this is belong to higher time frame. Just move to see on weekly chart. This is the gap. Up to now, are you clear? Okay. There is a delay here. Okay, next. We combine all the information we got from the higher time frame to the lower time frame. If we cannot see the movement clearly, we just go down to lower time frame again. For example, from here we know, for example, I do the analysis in the daily chart. I find out that this is a gap between two bases. So I got by move to weekly time frame, I see there is a gap. So if I want to be more conservative with my trading plan, what I do is I move to lower time frame to lower my risk. So from here, when I put a position, it can be for example, I put a position in the middle of the range. I need to sacrifice about 64 pips. For example, I don't feel safe, so I have to move to lower time frame. For example, 1 hour chart. From 1 hour chart, we also see like ranging, but smaller compared to the 4 hour chart. For example, here this is the range. The range for 1 hour chart is only 48, 49, 50 pips compared to 4 hour chart. It needs around 100 pips. So we have this one. Just to verify, see, this one is belong to the smaller one, the smaller time frame. This one, but try to look for this one, for example. See, this is the range, market range for 1 hour chart, for hourly chart. See here, you can have identify best. There is a base here, drop to another base, try to drop again, but it failed and return back to the previous base. Okay, this is how we identify the gap in different time frame. There is also a possibility there is the gap inside higher time frame. For example, you see this one, it should be a range from higher time frame, but we can analyze the detail. We got here, for example, this is gap from 4-hour chart, but inside the gap we also can see this is a base from 4-hour chart. We have this one base from 1-hour chart, and then there are also gap from hourly chart. When you move down to lower time frame, for example, you need to zoom out first, looking for the range. We have around this size. About this size, okay. See? This one is a gap. From here, the movement drop to this one, for example. So this is the gap. The gap we got for 15-minute chart. Okay, are you clear? Okay, next, after we know about the best rally drop, actually we try to identify. I delete all the thing. We identify the risk from current situation. For example, I delete first. Delete. Let me delete first. So from one, for example, I use daily chart first. By looking at the price movement, we know this is the from price action. We know this is a downtrend. So during downtrend, there will be a correction. The feature in the downtrend is it's moving rally, then there is time they will consolidate. During consolidation, the market create a range. A range means base. Next, we identify support and resistance. For example, currently we have support around here. Let me align it first. For example, this one. Then we have a support. For example, resistance here. We have a resistance here. But we need to know that this high, this area is newly created, so we have to reverse the resistance from previous high. So it should be this one. when we look at the movement, the previous low is this one. Next, this one is the new high. So we have a prediction market will try to move down. So current situation, market is under correction. So the best like how to the best opportunity in trading is during correction. It is considered the safest one. From here, if we want to like find a position, we look for the conversion area. A conversion area means an area where support become resistant, or resistance become support. From this chart, we got hit this one. Next, we find out the range, market range. This one. So we marking area for us to look for entry position. It should be this one, around here. So we assume that when market already break this level of support, market will move down. So when we want to try to play safe, we should only look for short. We cannot for beginner, you have to do backtesting, find out the statistic. For example, for me, I already did backtesting a lot, so I can see here market range for daily chart is around this size. See here, around this size. We cannot decide, we cannot like have a conclusion the exact number for market range. Market is too dynamic. We cannot like precisely tell, oh, the market range is about for example 1000 pips. No, it always changes. For example, USD JPY, the market range during that time is around 50 pips, but now it's already changed around less than 30 pips. So we have always update the statistic. If you trade every day, you will see how it moves, how it expand, and it get smaller. Okay. For example, we already know that the market range for the daily chart is around here. Then it should be this one. Our trade, the area for us to look for a position. Why I take this one? Because if you see, this is about 2 times the daily range. About 2 times daily range. Though, then if you backtest the Euro USD patterns, by look at this one, for example, there is no fixed rule for trading. You have to always looking for every pattern for every instrument. For example, when market going up and do correction for Euro USD, after breaking the resistance, it will move up and then back again to the new support. The new support not always exactly above the previous range, or we can say it will not always overridden the new support. The last resistance will not always overlapping with the new support. So we cannot like identify exactly, but we can predict. This is the point. So from here, when market break the support, we just estimate market will going up and do some correction. We will look for short because from daily chart, the price action tells it is still downtrend. Reason simple. We see lower low and lower high. Next, we plot the range here to find the possible entry zone. We already know that market will be reversed around this area. So the next thing, we go to lower time frame. We know that from daily chart, the support resistance is around here. This is the point. In SMC we call it a POI, point of interest. But for price action, we only acknowledge it as area we need to be aware for looking a position. The scenario for this one, after reaching this place, it will be a downtrend. So we will look for a reversal. Since this is a downtrend, so we still eligible to look for sell. But where is the location? We need to rely on lower time frame, look for reversal pattern. For this one, we look for rally base drop. So for example, you trade on a daily chart, so you will, for example here, after you open a position, you need to put a stop loss bigger because the volatility on a daily chart is bigger compared to the lower time frame. So if you want to reduce your risk, you have to move to a lower time frame. For example, I will take daily chart, hourly chart. From this one, I try to show you the simple simplest one. From here, I got range here, and range here. Rally, base, rally, base, rally, base, drop. So it means this is the reversal pattern. Oh wait, this this one. Once you see this one, you see this pattern, so your entry point will be, this is the range, the best. Once it's break this pattern, this best, we will put short here. The stop loss always above this one. Target depend on your choice. For example, if you back test it, and I need to go up first. For example, you look this one as a movement from 4-hour chart or daily chart, so you take the profit here. For me, I will take around 75% range size that will be around here. This is my target when I put my position for daily chart. But if I'm doing scalping like or shorter time frame, I will take profit for only, you see here, you see this one. So my target will be this one, because I will still expect that after market drop here, they will go up again. Then I will take another position here up to here. Okay, this is the trading plan based on this pattern, but you have to aware for support resistance from higher time frame. For example, if the price already break this one and telling you rally base drop, I will be very careful. I will take only a shorter smaller profit here, because this one will be riskier compared to the reversal pattern at this area. But for example, after break this one, it return back here and up again, so rejection here, that will be another story. I will take this one. I will consider this one is excess liquidity, excess, or call it sweep area, liquidity sweep. This one will be safer compare when this one up and show a reversal pattern here. When I take this one, it will give more risk. That's all. Can you digest it? Okay, just be patient. market need don't like too rigid. We need to be dynamic, aware from movement from the higher time frame. We need to be detailed for every movement. Every rejection doesn't even you can see there is a rejection on if you can see there is a rejection, it doesn't mean the risk will be the same. Different area, different condition make the rejection become make the rejection have different risks. So you always try to backtest and show how each rejection will give you a safer trade. Yes. Okay, that's all for now. If you have no more question, then I will off now. Okay, everyone. Thanks for watching. See you again. Good luck with your trading. Always be careful.